The stock of the day is brought to you by IG, Australia's #1 CFD provider. With over 17,000 markets and extended trading hours, turn US earnings season volatility into opportunity. Get started at IG.com.
And the stock of the day is from the bigger end of town, the big end of town, I should say. That's Cochlear. Shares are coming under a heap of pressure as Cochlear is guiding to the lower end of its range for the full year. So guidance for implant growth of 10% was maintained, but services sales are expected to deliver single-digit declines. So with underlying net profit unchanged, but now toward the bottom end, that would imply second half growth to be similar to the first half. That's according to UBS early analysis. UBS, by the way, has a sell rating on the stock, a $270 price target. So that's sort of saying a lot's riding on the service revenue picking up in FY26 with some new product launches due mid-calendar 2025 from what I can see. So my guests today, Dean Fergie from Cyan Investment Management and Luke Winchester from Merriweather Capital. Luke, I might start with you on Cochlear. This is one of those companies, you know, a stalwart of the Australian market. Obviously, its product is in demand, but it just hasn't been firing on all cylinders as of late, has it?
Well, certainly not the share price, Nadine, and I think it can be lumped with a little bit with CSL here. They're two of the stalwarts of the healthcare industry in Australia, the big large cap behemoths in that sector. And if you have a look at either of their share prices over 3 to 5 years, largely sideways since that sort of post-COVID period. And a big portion of that is valuation. They were trading on some lofty multiples. Each of them, CSL probably 40 to 50 times. Cochlear's got as high as sort of 60 to 70 at various points. But, it goes back to what I said in that introduction. If you owned Cochlear and you opened up this report and you start looking through the presentation slides, it all looks really good. Really strong revenue year on year, nice margin expansion, good good product updates and things like that. But as I said before, it's that outlook for the future where the market's always looking forward. And so that as you said, that second half potentially flat on the first half when they guided the lower end of that guidance. It's just not what the market wants to see. It wants to see good results, but also the strength of that continuing into the future. So combine that sort of outlook with the multiple and where it was, that sort of share price reaction probably is deserved a little bit. Did some quick numbers. It still trades on about 45 times earnings. Now, for Cochlear, that's going to be right down the bottom of its range. As I said, it's probably traded between sort of 50 to 70 times, depending on how the market really feels. So I'll say a hold for the program. I think if you're the sort of investor who, you want the certainty of a large cap like Cochlear, you look at the long-term trend, it's recovered from blips like this in the past quite easily. I suspect it will again. You'll see volatility in the short term around that elevated multiple and potential, they've got the ERP program, the investment into new products. That will throw around the short-term numbers. But you just got to be aware that, price does matter. And we've seen that with CSL. We've seen it with Cochlear. Will we see it with CBA? Everyone's talking about how expensive that is. You will sometimes have to stomach just trading sideways, trading down while a business backfills that multiple that the market's given it. So I'll say a hold, great business, but I think the market just paid a little bit too much a couple of years ago for it.
Okay, thank you. So a hold coming from Luke Winchester. Do you see it any differently, Dean?
Not really, although I'd be less inclined to hold. I'd certainly be looking at Lightning. I think you're seeing a company on a big multiple that's got a lot of expectations priced into its share price. The lower end expectations now are for profit growth of about 15%, but that is kind of a little bit hidden because a lot of that is in US dollar sales and they've had US dollar headwinds. So the actual underlying growth is low single digits. So if you're looking at a company that's doing low single digit growth on a PE of 45 odd, I think there's a fair bit of downside from a valuation perspective. And also kind of think the market is really focused on momentum at the moment. The stock just went up and up and up for about 5 years. It went from $70 to $350. It's come back to, what is it today, like 265, which is pushing towards like a 5-year low. I think when you tend to break these technical barriers, there's potentially more downside than up. And I'm just not sure what's going to turn that ship around in the next 6 to 12 months. Maybe some successful product launches will happen. But if they're citing a whole kind of cost of living crisis as impacting their business, then I'm a little bit hesitant to be too positive on Cochlear at the moment.
Okay, there's a lighten and a hold for our stock of the day being Cochlear.
The stock of the day was brought to you by IG. Turn volatility into opportunity this US earnings season with extended trading hours on over 110 key US shares. Get started at IG.com.